Okay, so on that quick update, so maybe 15-20 minutes update on NMG, where we are. I'll be making forward-looking statement as previously mentioned. Please read this warning we have on the website. So the fundamentals didn't really change. There's a lot of noise around the market trends, but we are buying EV, especially in Asia, but also in Europe and in the US. It is growing. It's not growing as much as we thought, but it's still growing. We are with the right partners, with Panasonic and GM, two strong proponents of this battery material supply chain construction in the Western world. So we have those offtakes that we're finalizing negotiation for FID, but we have the right partners around the table. We're located at the right spot in the tier 1 operating jurisdiction in Quebec with low-cost hydro and everything we need with customer in our backyard, right geology, right infrastructure, right talents. We're at the right place at the right time. And then we also invested a lot of time and a lot of money into de-risking this phase 1, thanks to our phase 1 operation. So now the phase 2 project is really built on strong foothold in terms of de-risking. We have the right scale strategy. We can provide all the graphite needed for the Western world, be a very successful partner for all those tier 1s who have large demand. And we are focused on ESG principles. It's important to differentiate ourselves to the Asian supply chain, and this is something appreciated by both our local communities, our government, and our customers. We're now 115 plus professionals, really working hard to establish this phase 2 facilities here in Canada. So where are our facilities? Matawini project. We'll show some picture where we are on the Matawini project, 2 hours north of Montreal, scheduled to produce 106,000 tons per annum of concentrate after 30 months of construction after FID. So if FID is later this year, 30 months after, we start producing that concentrate that will be sent to Bécancour, most of which will be transformed into anode material, a little bit for the traditional markets and other applications as well. And Bécancour is where we will transform it in 44,000 tons per annum of active anode material. So those two, Matawini, Bécancour, were the main topics of our 43-101 feasibility study delivered recently. And in the background, we're working with the Pessamit First Nation on the Watnan mining project there. We're slowly making the first steps. So after FID on the phase 2 on Matawini and Bécancour, we can start bring slowly but surely Watnan into an FID position as well for phase 3 of our journey. So great partners, as I've mentioned, Palingers is the foundation of those partnerships since 2019. Now we have attracted other partners like Investissement Québec, all the time participating in the biggest rounds. Great partners since the beginning with Canada Growth Fund that just joined the shareholder registry in December, alongside General Motors, Panasonic, and Mitsui that are very active and very important market participant too. So we have a great balance of governmental support, private money with end customers and shareholders. Like a third of our shareholding is between NYSC, NMG, and TS6 main board now, NOU. So a big balance, a good balance between market, government, private money, and customers. We are well financed with about 89 million Canadian dollar in the bank in the last financials. So we need to stay prudent with that cash position. It's a lot of company envy that cash position. We have a 1.8 billion CAD project to build so we need to be prudent before FID to make sure we don't need to raise other capital and we can proceed with FID on a timely manner. So the two projects that are working hard to bring to FID in the upcoming few quarters. First, Matawini mine, as you know, construction started since a few years already, but we're prudently making only the important preliminary works to make sure that once FID is obtained, we can be 30 months after in construction. So we have made A lot of engineering. We're close to 60-70% detail engineering on the project. We've made environmental works, a lot of prep work, and we're keeping, now we have made the decision as well to do another 10,000 ton of mining at the phase 1 Matawini mine to produce a bit more concentrate to test some commercial operation on top of our phase 1 operation. So that's something we're doing on Matawini. And also on Bécancour, we did some prep work on site. So we did a tree clearing, we did some access road last summer, did a bit of the environmental geotechnical works. But the main work on Bécancour is really to advance engineering to the same level of Matawini to make sure we are advanced enough for FID in the upcoming few quarters. In 2 quarters, would like to be like around 30%, 20-30% total engineering on the project. So results of the feasibility study, it was a big milestone. About 2 months ago, we announced updated feasibility study on the back of the offtake we signed last year. We needed to update the design, update the flow sheet with the support of established suppliers in the market. So making really a battery grade facility that made the proof before. Overall, it stayed pretty much the same project. There's no big change in scope. So similar NPV of over $1 billion US. We are at 17.5% post-tax IRR, close to the 21 we had before. It's really about pricing that went down a little bit compared 3 years ago. That's the main driver to this IRR being lower because of Chinese oversupply that we'll discuss later. We're still 5 years payback period, so it's still a very attractive project. And one key criteria there is we have a fairly low OPEX on the project. That's what we'll discuss. The competitiveness of NMG project. So outside of China, we're by a margin, a first quartile in terms of C1 costs. We're very low cost producer thanks to close proximity to infrastructure. The fact strip ratio, it's at surface, 1.1 to 1 for the whole mine life. So a lot of good attribute makes it very low cost at the mine site. If you compare the cost study from Benchmark Minerals with our feasibility study we just published. So the mine is low cost, and that mine is very close to where we will transform it into anode material, making our OPEX structure, thanks to this close proximity, the good integration, low cost hydroelectricity and other access to reagents, close proximity to our customer, makes it on the right side very attractive OPEX structure for our production. So you see NMG, if we compare with what is produced in China, we've downloaded over five of the major Chinese producer in China, translated from Mandarin their financials with our financial advisor to compare the OPEX structure with ours. So we are very favorably positioned. And if we were selling at the same EBITDA margin, basically we would be able to achieve same kind of pricing. So very important for our shareholder to understand NMG is very competitive on the operating cost. We have a capex at par with the other project we announced feasibility study in North America, and that's where it's difficult to really understand the capex structure of the Asian producer, and most importantly, their cost of capital. So they have significantly lower capex in Asia, and that capex is financed through significantly lower cost of capital. But in North America, we're looking at the landscape. We're like all buildings, similar facilities. So we are working at about $20,000 per ton of anode material produced on capex intensity. So similar to the others, but very good OPEX structure thanks to cheap hydro and close proximity. So basically, what is happening today in the pricing for graphite, there is clear dumping made by Chinese producer into the American market, and that's why the International Trade Commission is currently very active at working on this anti-dumping case that was raised by a lot of graphite potential project in the US. So this is happening now. So in July, we should have the final preliminary ruling that is very important for the future of the local supply chain construction. So ESG is very important for NMG. We did as well during the feasibility study an updated life cycle analysis that revealed that we are at 1.57 kilogram of CO2 equivalent per kilogram of anode material produced. So we're still positioned number one by a margin on the benchmark Natural Graphite Sustainability Index, and we have a very attractive ESG competitiveness in the market. That's a big differentiator to attract the tier one investors and tier one customers. So a bit of slides on the market. As I've mentioned, we're still selling EV. Like in May, we sold 1.6 million EV in the world, so it's quite a big growth. Overall in the world, it's about 25% of global car sale increase in 2025 that is expected. But the main thing now is in China is over 50% since 12 months, while in Europe about 20%, and in North America it's about 10%. So it's really becoming a big Chinese story, the EV development. So, and I was in China for a few times in the last few months. It's very impressive to see the amount of brand, the amount of supply chain construction that happened in the last 5 years. And also now recently they are now really converting all the the truck itself for shipping is becoming more and more EV. So what is happening? Well, like I never thought it would happen so quick. So you see in China, the availability of needle coke, that is the main precursor for synthetic graphite, is becoming scarce because it's a 1% residue of the oil and gas refinery process. And they're starting to shut down refineries because the oil and gas need in China is becoming impacted significantly with over 50% market penetration on EV. So you start to see that kind of a trend that in the future, oil and gas consumption in China going down. I would say oil consumption going down impacted needle coke availability in China, and even Chinese synthetic graphite producers are now looking for needle coke outside of China. So that's a big event, and needle coke cost went up by 70% in the last few months. You should expect a bump on synthetic graphite pricing that will help natural graphite for sure. So in North America, we have good sales for GM. They had, I think, 94% growth of their EV sales in Q1. We're looking forward to see the Q2. For sure, the geopolitics doesn't help these days. Tesla, namely, and also the whole supply chain in the US is a bit shaken by the recent tariff, no tariff and change. But the two customers we have are committed to that strategy. They were committed prior to IRA, and they are still working hard at deploying all the supply chain for their construction. So we are invited to the grand opening of Kansas later in July. So that's the second plant of Panasonic. So Kansas and DeSoto, it's opening this summer. While Nevada, as we know, is opening since a long time, while GM is having two plants with the Ultium joint venture with LGES and a third plant with Samsung SDI. So we're monitoring those three plants. What are the program, how NMG can work well with our two partners to be the best suppliers possible. But so far, so good. Our two customers need that production, and what NMG represent to them is about 30% of their local demand. So it's not they still need to find other graphite for the future for our phase 3 if they keep building and operating those current plants that they have on the schedule. So currently it was mentioned by both Panasonic and GM that they need to diversify from Asia, and they need to have this production available for their North American operation. So we've delivered a feasibility study to them. We've delivered the debt package that you saw recently. Now we're on ongoing negotiation to update the commercial terms with our off-takers and satisfy all the remaining condition precedents of the offtake to proceed to FID. So stay tuned in the next quarter to see what we can announce and where we are with our two important customers. So, and also it was all an EV story, especially in North America. Recently, we saw LGES announcing the first, I would say, major ESS battery facility. So LGES bought one of the plant of the joint venture with Ultium to do LFP production dedicated to ESS, because the energy storage solution business is booming. There's pretty much 1 gigawatt hour being installed per day since a year or two. So it's about 1,000 tons of graphite per day needed to install the energy storage solution. So it's a big growth that will represent, I would say, 25 to 30% of the overall market. And that's a very good news, like 64% growth last year. So that's very important boom, because it's needed for all the solar facility, but also all those AI-driven data center. They require so much power that any form of renewables is needed just to supplement what the grid can do. So there's a big demand for ESS market coming up that the market wasn't expected to be that important. So this is a big driver for the future to monitor. For sure, we have challenging geopolitics, but there's also some support. I would say those tariff and the anti-dumping case allow our customer to diversify their supply chain, so that's a positive. We don't expect Canadian tariff to stay very long. Currently, graphite is considered energy resource, like 10%, and it's still all from China currently, or Canada, really, where we are in the supply chain. There's very few options that are viable in North American continent. So we are very confident our American partner will see how important Canada is for the critical minerals, and we need to work together as a bloc to be able to build that supply chain. And more to follow in July. I think it's 19th of July, one of the date where we should expect some news on this current International Trade Commission anti-dumping. And the first preliminary discussion were around 721% tariff on up to that number on Chinese graphite. So that's outrageously high. It's not something that will be viable for our customer. They need to find alternative to that. And we're looking forward to see what will be the final negotiation on those tariffs. So that's why McKinsey, on a public post in a month or two ago, announced that graphite really is top number one highest risk on geopolitical landscape. So graphite, because of 5 main things, very concentrated in China for mining. There's about 78% last year of flake graphite coming from China. Pretty much all refining of uncoated spherical graphite happened in China. We have a big need for graphite, so we need to build much more. And there's a major export restriction now for Chinese graphite suppliers to sell outside China. They need to have those export licenses that are closely monitored by Chinese authorities, and it's not a done deal to have it. So that's big issues, and it's very difficult to get into the market. Like, we've been at it since many years, a few $100 million of spending. So it's difficult to enter the market because you need to have both the mine and the transformation, and having a big spectrum of expertise within the company. So hurdle to diversification is very high for the graphite producer. So last slide on the market. Basically what it's showing is, in China there is an oversupply of everything. There's an oversupply of electric car, there's an oversupply of cells, of cathode, of anode. In the last 5 years, the Chinese government really poured money at everything related to the EV transition, because they need to do it for their health, for their economy. They know they have everything pushing toward that direction. So there's an oversupply of everything in China, while in North America we're watching and we're not pushing as hard. So there's an opportunity for the cell maker being in position here to dominate the North American market. They need that graphite. So we are here for this balance between North America and China. We saw recently little hope on the pricing. However, this pricing demonstrates that NMG at this pricing level can survive. We can have a margin, will be profitable. However, it's not what we expect for the long term. What we see in China now is a rationalization of all this. They've sacrificed a lot for the EV transition, so they don't offer a lot of services to their communities and all that. So they really put probably too much money for the budget into that supply chain. So now we see in China some operations shutting down, and we see one thing sure, there's a cycle in mining, but there's a cycle in Chinese support of their company, and now we're at the top of the support. So there's no more support coming. We expect for the graphite producer. And we see the needle coke scarcity increasing synthetic graphite price in the upcoming few months. We're closely monitoring that trend to see pricing picking up. So where we are, so we published feasibility study. We align all the different lenders. We have an ongoing discussion with them. They have all the due diligence package now in their hand. They're coming on site in the upcoming few months. So we're progressing toward confirming the money itself. So the project financing to go alongside what our customer have committed in terms of equity. We have also the investment tax credit, the clean tech manufacturing investment tax credit that is north of $400 million CAD for us. So it's quite significant. So we are well positioned on the project financing. We are now progressing toward detail engineering on both the Matawini, but namely the Bécancour battery material plant. We're very interactive with different suppliers. So a lot of different initiatives are happening. So it seems when you develop two projects of that magnitude, it seems progress. We don't have a lot of press release every week. However, there's a lot of actions. One of them was the IBA with the First Nation in December, deal that took about 10 years to negotiate and finalize. It's done. Great opportunity. We migrated on the TSX recently. I'm constantly meeting with governmental officials, or many times with Quebec engineers coming in China. I see engineering and vendor selection. We had a few visits in Asia to visit suppliers and visit commercial operations. So a lot of different discussions to make sure we advance the project on a very strong foothold. So the team is keen and ready for the next step once we have project financing to be in construction mode to deliver in a few years. So on that, I'm ready for a question, Julie, if there's anyone.
Yes, Eric. Good morning, everyone. So I invite shareholders who are registered as such on the platform to submit questions using the button on the left of your screen. Les actionnaires qui sont enregistrés comme tels dans la plateforme peuvent utiliser l'option des questions sur la gauche de votre écran. Il y a un bouton qui est dédié pour ça. On va prendre le temps de répondre aux questions dans la langue qu'elles sont posées. Donc, si vous souhaitez les avoir en français, aucun problème. While we wait to see if we have questions, I'll remind everybody that the presentation has been recorded and will be made available in the coming days on our YouTube channels and on our website if ever you missed anything. Pour les actionnaires francophones qui souhaiteraient avoir accès au contenu en français, je vous invite à communiquer directement avec Marc Jasmin, qui est notre directeur des relations investisseurs, qui pourra s'assurer de vous relayer les informations ou de vous faire un bon résumé en français sans problème. If there aren't any questions, I will officially wrap up today's meeting. Ladies and gentlemen, thank you for your participation. Mesdames et messieurs, merci pour votre participation. Je vous souhaite une bonne journée.